I do fear bears.
Okay. The other thing
They're
is
giant, marauding, godless killing machines.
there's one right there.
Right there.
Okay.
That's not a real bear, right?
No.
Okay, thank you.
That's the editor of the New York Times.
Okay.
Can you feel it? Can you sense it? The worry, the anxiety, the stress. What if this was Bitcoin's cycle top? 112K was it, and it's down only for the next year, maybe 2. This is your one-way ticket to the pain train of $40,000 Bitcoin. The bears are right the whole time. Or stated differently, what if this cycle ended just like the last one with a double top? So, in case you haven't noticed, there is some concern, panic in some circles across social media right now about the double top theory. But what is the evidence to support it? And what is the evidence to the contrary? That's our discussion for today. And spoiler alert, screw the bears. The bears hate freedom and they want the terrorists to win. I'm of the belief that the idea that we're in a double top scenario is pure madness.
This is madness!
And I'll show you why with some actual things to back it up, not just pulling out of my butt, okay? Let's start with the theory itself. It's actually very simple, which of course makes sense because bears have simple minds. Dirty creatures, bears. So this chart sums up the entire thing. Bitcoin hits a double top in 2021 with the second top coming in slightly higher than the first one, while getting a bearish divergence on the RSI. Then Bitcoin went into a multi-year bear market after that, dropping from 69 to 15K. It was brutal. You were probably here for that. Maybe you weren't. It was brutal. Trust me. Fast forward to the current cycle. We're in what appears to be a double top scenario right now, with our second top slightly higher than the first one, while getting a bearish RSI divergence. So the worry is that we're on the precipice of our next multi-year bear market right now. It's all over. It's your last chance to sell. Run for the exits now. Basically, the bears have a scary looking chart with one indicator flashing, and it's making a bunch of people afraid because obviously there's a lot of PTSD from last cycle. If you've been in crypto since 2021 and you're still here and you're showing every day, you're scarred, man. You're fucked up. Really. Now let me tell you why I think the bears are dead wrong here. First, understand that bearish RSI divergence is just one signal, and it needs to be taken in context with other technical, fundamental, and macro factors. You can't just blindly rely on it because it's not always correct. You want some examples? I got examples for you, okay? Look, 2023, price up, RSI down, bearish divergence. But what happened then? Bitcoin goes on to make new all-time highs. You want another one? 2017, price up, RSI down, bearish divergence. Then Bitcoin goes on, of course, to smash new highs. A bit later in 2017, another time, price up, RSI down. You probably guessed what Bitcoin did in that bearish divergence situation. The price of Bitcoin went higher, makes new all-time highs around $20,000 back then. Now, I think you get the picture. Now, look, perhaps you'll agree that RSI divergences are not the be-all, end-all. It's just one of many things in our toolkit. And all these are put in context, right? So let's do just that. How does our current macro backdrop compare to that of 2021? Well, we've got some key observations for you here, 3 in fact. But first, before we dive into that, if you're ready to trade crypto and actually compete for real money, then listen up, because right now, FEMEX, OG cryptocurrency exchange available to anyone, anywhere, deep liquidity, is launching a $5 million trading competition. That's insane. That's a lot of money, man. $3 million in team prizes, $1.5 million for individual top traders, and $500,000 newcomer challenge for anyone fresh who signs up. And again, doesn't matter where you live, you can use FEMEX, no KYC is required. You might need a VPN in some situations. You can join my trading team right now using the link right down here below. Compete head-to-head against top traders. We're gunning for the top spot here. Trading officially goes live on June 9th, so you have 6 more days or 5 more days, depending when you watch this, and it goes through until the end of the month on June 30th. But registration is open now, so you can sign up to my team right now. This is one of the biggest events in crypto trading, and if you want in on the action, hit that link, sign up to FEMEX today, and let's win together. Okay, the 3 things. So, first of all, corporate buying is happening right now. So there's 116, probably 117, 118 public companies buying Bitcoin by the time you watch this that collectively own around 809,000 Bitcoin. During the 2021 cycle peak, public companies owned just 183,000 Bitcoin, and really no new corporates were coming in. There's basically MicroStrategy and Tesla and Square. Here's the web archive screenshot from bitcointreasuries.net from November 2021. You can see back then there were just 33 public companies in total that were playing this game, with really just a few big, well-funded players. nothing like today. So just step back and soak in the difference. We've got 116 companies now, new ones being announced basically daily at this point, who are buying Bitcoin. And we're going to now see treasury companies launching for Ethereum and Solana and XRP as well. It's a whole other story. Now, I won't get into all the details here, but the signs say that the buying won't be stopping anytime soon. 4 years ago, there were only a little over 30 companies, and they weren't on the kind of crazy buying sprees that we're seeing right now, because MicroStrategy paved this path forward of all this intricate BS that they're doing to buy truckloads of Bitcoin, and other companies now running the same playbook. These companies are going to buy tens, maybe even hundreds of billions worth of Bitcoin in the coming few years. So clearly, we're in a completely different market from 4 years ago on this alone. The big boys are here with persistent bid, and I think this is reason alone. It's just enough to say, BS on this double top theory. The second observation has to do with Bitcoin compared to the Fed fund rate, which you can see right here in purple. So, long story short, the Fed fund rate is basically one of the levers that the Federal Reserve is able to pull to manipulate the US money supply. So, when rates increase, the money supply tightens. When rates decrease, of course, the money supply loosens up a little bit. Supply expands, credit's easier, all that kind of BS, right? And 2021 was a very different situation. We were heading into high inflation. Inflation was spiking. Fed started hiking interest rates. As this chart shows, Bitcoin's price is relatively inversely correlated with the interest rates. Now look at November 2021 here as an example. Bitcoin was at its all-time highs. The Fed fund rate was basically at zero. And when the Federal Reserve turned the boat around and began to hike interest rates, even just began telegraphing, not even hiking itself, just saying, we're going to do it, guys, it's happening. Basically, sell now and run for the hills, right? So they're telegraphing they're going to start raising interest rates. Well, Bitcoin started to drop. The macro situation changed. That was a big moment. Now let's look at our current macro situation. It's the complete opposite of 2021. That was top of the business cycle as well, top of the credit cycle, all that kind of stuff. Bitcoin right now is over $100,000 at the time of recording this video, and that's despite the Fed fund rate being near its highest level over the past 18 years. Rates are projected to decrease from here over the next 6-12 months, which means Bitcoin's price will likely continue to go up as those go down. Plus, guys, again, we're nowhere near the top of the business cycle. We're nowhere near the top of the credit cycle. The dollar's weakening. All these other macro tailwinds that are basically saying where we are at right now is not where we were macro-wise at the 2021 top. We're in a very different situation. If anything, what the macro is screaming right now is that we have way, way higher to go. Okay, observation number 3. Retail buyers are simply not here right now. Cycle tops, blow-off tops, whatever you want to call it, happen when the herd is FOMOing in hard, but they're simply not here right now. Here's Google's search trends for Bitcoin. Dead. The circle on the left was the trend during the last bull run. The circle on the right is our current bull run. Then we've got stuff like the Coinbase app, which is currently ranked 23 in finance apps and closer to like number 400 of all apps. At the top of the last cycle, it was number 1 in finance, and it was like number 1, I think, for all apps too, or at least in the top 10 for all apps. Then there's Bitcoin's current active addresses, which right now are within very normal ranges. Again, nothing out of the ordinary that would say, hey, price is topped, it's all over. Again, this was all flashing back at the 2021 top. We saw blow-off addresses with active addresses in both the last 2 cycles that corresponded with the price tops. Not happening right here. Also, Bitcoin dominance, the circle on the left was the 2021 top, and dominance was around 40%. The circle on the right is where we are now with dominance in the mid-60s, aka the market has not flipped over into massive risk territory yet, where we have altcoins outperforming. What we usually see during market cycle tops is retail piling at altcoins because they missed the boat on Bitcoin. They want to have the catch-up trade and ape into all kinds of random bullshit. That pushes Bitcoin's dominance down, but of course that's not happening right now, at least not in any significant way. So the point is, all our data says retail simply is not here, which means we probably haven't hit peak euphoria yet. And again, retail will come when we're at the top of the business cycle, when everybody's getting rich and everything, right? Look, the main message is that just because we have a similar-ish looking chart to 2021, the context simply doesn't fit. Okay, and it's a double top until the price goes to 120, and that's not a double top anymore. Yeah, there's a similar RSI reading, but that doesn't mean the price is going to play out the same again. And again, that's all because of the context here. This market is completely different from 2021. We've got the insane corporate buying pressure that simply was not here in 2021. We have higher Fed fund rate, which will be moving down throughout the rest of the year. Okay, we're not at the top of the business cycle. We're not at the top of the credit cycle. Manufacturing set to expand, all this kind of stuff. Retail's not here, but they were definitely here in 2021. They were going insane, and they're simply not here right now. That's not even mentioning nation state adoption, derivative funding rate data, which shows we're nowhere near a top, even a local top. Several other on-chain indicators as well showing we're nowhere close. So at the end of the day, screw the double top theory, screw the bears. We go way higher from here. They aren't going to shake me out, and I've got, well, a hell of a lot of my money where my mouth is, put it that way. Thanks for watching.